What's up, guys? Day trader knockouts here. I got another video for you after the FOMC meeting minutes that happened. So we're gonna look and see exactly how exactly the chart reacted. As you all know, it acted a little bit more bearish and bullish. It reacted negatively to the FOMC meeting minutes that came out this 2 o'clock Eastern Standard Time. And we're gonna figure out how to prepare properly for the upcoming trades that you could potentially take on this Thursday and Friday session. I'm dirty, guys. Sorry. But with that being said, let's get into the video. So as we start off and we look at the day time frame chart, you can see here we're in a strong uptrend at the moment. The bulls are in control, and we've created all-time highs. We're still around that area, and there's many areas for proper pullbacks to happen. To look for higher time frame retest some prior areas of structure. So first off, we got this. Let me see here. We got this gap right here from 525.83 to $523.83. Then we got the gap from $508.56 to $505.89. So many areas showing it, and we got everything pretty strong. Yeah, for the most part, the Bulls are in control, as mentioned. Now, let's look at other things and other factors to take into consideration. So, another thing that shows strength for the charts is the fact that there isn't really any signs of new chart patterns occurring, like double tops and head and shoulders, anything like that that's bearish, because the thesis, what I've learned from my mentor Troy Brigade, is he typically says that any time that the chart looks for signs of failure against the trend, that's when chart patterns typically occur. But at the moment, you currently don't see anything. We got strong gaps and continued pushes, gaps and goes, and not really any gap fills on previous gaps. We just keep pushing and pushing, and so far we're just at a good level to have an actual pullback. So no chart patterns have occurred. And in terms of what is showing confidence to show that this bullish momentum is even stronger, first off, we've created all-time highs. Duh, that's a given. Second off, we got two gap and goes from here and from here as well. And we have many areas to look for pullbacks. We got there, we can retest right here, and we can retest at the gap here. So we got three areas of structure showing. On top of that, we also have all these other, and ignore the positive weekly expected move, that's wrong, but we have all these other previous areas of structure that aren't just gaps, but here that used to be a day time frame double top. We completely ripped through that, violated, and we are currently above it, and that's an area that used to be resistance and now could be support. And there's a few other areas like that before as well on the lower side that act as support now that previously acted as resistance. So all of that shows signs of good strength for the buyers from a price action perspective. And not only that, something else that I mentioned or that I realized, when you chart from the Fibonacci perspective from the lows to the highs, we're at a 0% retracement because we're at the all-time highs. But when you chart it here, and another thing to take into consideration is whenever you chart from the highs to the lows, so from here to here, what you'll notice is that that is a 161.8% retracement. We've already made past a 100% retracement, but just to take into consideration that an upward target, just to look out for signs of no follow through, and just it's not too big, but just something to take into consideration is that the 161.8% retracement. Typically, when we get to this area, that's where buyers and higher time frame charts tend to get overbought, and they look to dump part of their positions. Typically, from a statistical and probability perspective, and that's at 542. That's at $541.55. So just take that into consideration for when we do start to get up and up and up into the charts. If we do, so with that being said, let's get a little more granular. Let's look at the hourly chart. So as you can see here, we're also in an uptrend, not really any actual legit pullbacks. As you can see here, uptrend. We do have some consolidation right here, but in all honesty, I wouldn't really consider that anything significant or like a higher low. I wouldn't even consider this really a double bottom. It kind of is, but it's in the span of like 3 days. We're in the same area. I don't really think I would consider it. Maybe if we retrace all the way here and then move down here, maybe I would consider that a little more like a double bottom. But to be honest, to me, this is just more like consolidation. And so again, very bullish from a price action perspective. And on top of that, there's no chart patterns that are being shown as mentioned because there's no signs that the failure for the trend is going to happen. And again, we had those same areas of previous resistance that are acting as support now as mentioned. And then when we look at the market profile, we can see here that we're all getting a bunch of, let me show you here, that we're getting a bunch of value areas overlapping with amongst each other. So just take that into consideration as well, showing that all the selling momentum that did try to happen today pretty much is invalid, and everything here at the lows of the market profile is pretty much weak sellers getting involved just due to news influence type of thing. So that's also another reason why bulls have more confidence at the moment and why I'm more bullish on the chart. Not just because we're moving up. There's other factors. All the factors that I'm mentioning are all partial reasons on why the data accumulates and I become more and more bullish. It's all about data, guys. Having a data set and just a chart alone isn't enough. I mean, price action obviously matters and it's one of the most important things, but it's not just price action alone. It's price action, looking for inflection points, looking for chart patterns, looking at market profile, volume profile, and when you have everything accumulated with your data set or what you're looking for, that's when you start to become more and more biased and for one side. Never too biased to the point to where you just take shiny objects for any reason. You have to have proper setups. But again, it's just using a data set to have the highest probability edge in your favor. Now, as mentioned, now let's also go over exactly where buyers would have more control. So obviously, anything above this area right here, anything above $523.40, where the gap, where we had that gap up on the May 15th session, anything above that, we're still considered very bullish. Now, anything below $523.40, I wouldn't necessarily mark that as bearish necessarily. I would just say that if we had an hourly price action, price acceptance below that level, I would say that bears are starting to step up a little more, but they still have a lot more work to do before you can actually consider that bearish momentum and bearish strength. But that's just to take it to consider. That's just something to take into consideration and realize. So Bulls are in a very good position. Let's just say that, and let's move forward with the video. Now, let's go over setups to look out for. So, what I'm going to be looking out for, I got two bullish setups I'm going to be looking for just to be in favor of the chart. So, first and foremost, I will adjust these setups depending on if we have a gap up or a gap down close, or if it goes in alignment with my pre-market flexibility rule, because sometimes you do have to be flexible and you have to adjust on the fly as long as all of the data and all of the higher time frame charts like the 1 hour and the 15-minute give you in at a discounted price entry, especially if you look at the day time frame also, and there shows confluence for reasons to want to enter. Now, my two levels that I'm going to be looking for, if we just get continuation above, I would be looking for a 15-minute higher time frame chart pattern that shows high signs of continuation, like a 3-bar play, higher low, hammer candle, anything like maybe we get a naked bullish body and then we pull back. It's just something that shows that the bulls are in control on the 15-minute time frame chart. And I would be looking for upward targets. So first off, I would target $533, and then $534 would be the optimal target. And then obviously keep the runners and try to maximize the profits as much as I can. And the second scenario would be if we get a retest. Now, the reason that I have it at $529.75, and I'm not going to be looking here, is because when you look at the market profile right here, guys, we got a double distribution trend day on this session. So obviously from a daytime frame perspective, this just shows extra confluence that bears are more in control, or that bulls are more in control here. So I don't want to have to get involved here, even though this is all weak selling, in my opinion. Still, I just want to get extra confluence because I'm a very picky trader with my setups and get some form of 15-minute bullish chart pattern or higher low above here. And once I enter, my targets would be let me see here. My targets would be $530.20, and then $531.20 is the optimal target. Now, my setups to avoid, I'll be very picky with. So first off, even though I'm more biased for the bulls, I'm not just gonna take any bullish thing that looks shiny and nice. I gotta make sure I get a proper higher time frame confirmation. And I get something solid. So just don't be too biased and have higher standards for your trade. Second off is I will not take any trades between $529.75 and $527.60. That's basically all of this in between right here, from the low of this consolidation area to that. And then I'm going to make sure that I don't chase the market and I wait for a proper higher time frame pullback entry. And lastly, I'm going to have higher standards for my trades and wait for the proper 15-minute time frame confirmation. So, and also let's just look at the market internals. So as you can see here, we do all I really have to say about this, guys, is the selling. All of the market internals show that there was more selling than that there's more sellers that got involved rather than buyers, but it's not necessarily super significant, but it's just a little significant. And really, it just doesn't show that there's any signs of strong sellers getting involved with the market. It's nothing more than news influenced markets. But that's pretty much all I got to say for this video. I'm more bullish than bearish. I'm going to be preparing to trade for Thursday and Friday. So stay smart, stay green, guys. If you got any questions, comments, or concerns, please feel free to comment. If you got a reason for why I got a lisp, I got Invisalign in, so I sound like a dumbass right now. But always happy to do these videos. See you in the next video. See you tomorrow. Stay safe and stay green. See you later, guys.